Welcome to the Deep Dive, where we try to cut through all the noise of today's, well, really fast-paced world and bring you the most important nuggets of knowledge.
That's the goal.
Today, we're plunging into something truly fascinating. The rapid-fire, super interconnected nature of our financial landscape.
Right.
Think about it. Crypto movements aren't just about, digital assets anymore. They're deeply woven into global economics, major political shifts. It's all linked.
Absolutely. And for this deep dive, we've pulled together a whole stack of live news updates from July 17th, 2025, mostly from the Economic Times.
Okay.
And we're talking everything from like Bitcoin hitting surprising new highs to some really key shifts in U.S. tariff policy and even some groundbreaking tech in Web3.
So our mission today is pretty clear. We're here to kind of distill the crucial insights from all these headlines, connect the dots, and help you understand what's really driving the markets and policies right now.
And maybe most importantly, what it all means for you.
Exactly, for you and your world. Okay, let's unpack this. Let's jump straight into the heart of the crypto market then. Bitcoin. It's been on quite a wild ride recently.
Hasn't it just?
As of July 17, it actually surged past the 119,000 USDT mark, trading at 119,043.98 USDT.
Right, and USDT, just for clarity, is Tether, that stablecoin pegged to the US dollar. So yeah, those figures are pretty much interchangeable with US dollars when you're trading.
Good point. And what's really interesting here is it recently hit an all-time high of $123,218 before pulling back slightly, down to around $118,000.
Yeah, and that pullback, while noticeable, it hasn't really shaken analyst sentiment much. A lot of them are still predicting a potential rally towards maybe $150,000.
Oh, 150K.
Yeah, the underlying strength of Bitcoin, especially how resilient it's been even after hitting those new highs, it kind of suggests we could see another maybe 20 to 25% price increase before the short-term holders even think about taking profits. Even though it's facing some resistance around that $120,000 mark, it really speaks to a growing conviction in Bitcoin's value, I think.
Okay, so while Bitcoin grabs the headlines, let's talk about Ethereum, the quiet giant. It's forging its own path too, right?
Definitely.
It recently dipped just below 3,400 USDT, trading at 3,394.44 USDT. But it still managed a solid 4.64% increase over 24 hours.
Yeah. And we saw it surge past $3,300, then hit 3,414.74 USDT. That reflects a pretty impressive 8.45% jump.
Yeah.
That upward momentum for Ethereum is particularly significant because, well, it's not just about the price. There's a crucial resistance point for ETH at $3,980 to keep an eye on.
Okay.
But there's also this long-term prediction from Consensus. They envision ETH prices soaring to $15,800 by 2028.
15,800 by
Yeah.
2028.
Yeah. And look, this isn't just some wild guess. They say it's driven by Ethereum evolving into what they call a trustware infrastructure. Basically, a foundational layer of trust for all sorts of decentralized apps and digital interactions.
Yeah.
It suggests a really deep fundamental shift in its utility and its value proposition.
Interesting. Okay, so beyond those two titans, the altcoin space is, well, absolutely buzzing. Lots of surprising movers. What's catching your eye there?
Well, Monero is one to watch. It's testing key resistance right now. And for you, the listener, if it does pull back to the $269 support zone, a lot of analysts are flagging that. They see it as potentially a strong buying opportunity for a bullish reversal, maybe towards $417.
Okay, Monero. Got it.
And then there's XRP. Wow, it just saw a nearly 10% surge in 24 hours.
10%.
Yeah, it's now approaching its all-time high of $3.40, and it's right on the brink of a $200 billion market cap.
Incredible.
Its performance in July alone shows a massive 71.75% increase. Some people are even suggesting it could hit $5 this month.
$5 for XRP this month.
That's the chatter. It's not just momentum. It's a surge that's really redefining expectations for what's seen as a more established player.
That is a truly impressive move for XRP. What else in the altcoin world is showing that kind of unexpected sort of explosive growth?
Well, we're also seeing Curve, DAO, CRV surge 25% to hit $1.
25%.
Yep. And that was fueled by nearly $4 million in short liquidations, which, just to quickly explain, happens when traders betting against the price are forced to close their positions, essentially buying back, which can push the price up faster.
Yeah, the short squeeze effect.
Exactly. BNB, Binance Coin, also quietly surpassed 720 USDT with a 3.63% daily gain. Pretty steady.
Okay.
And Floki, one of the popular meme coins, it broke through its trendline resistance, and analysts are now eyeing a potential 52% price surge there.
52% for Floki.
Wow. And we can't talk momentum without mentioning Hedera Hashgraph HBAR, right?
Oh, absolutely. HBR soared to $0.2500. That's almost a 100% increase since its lows back in June.
Doubled.
Pretty much. And that followed the introduction of its first staking ETF. It really highlights how these new financial products, even for smaller cap assets, can dramatically impact their price.
Yeah, that ETF effect is real.
It is. And speaking of meme coins, while you've got Pepeto, PEPE, DotoGE, they're all showing strong technical performance, attracting serious interest. The risks are just as real. Always are with meme coins.
Right, like Bonk, for instance. It surged over 343%, but now it's facing a potential crash because of whales selling, large holders cashing out.
Right.
And interestingly, the Trump crypto coin seems to be lagging ahead of a pretty significant 45% token unlock, which could add more selling pressure.
Token unlocks. Always something to watch. Okay, that brings us to the broader health of the crypto market. What are the big numbers telling us?
Well, the global cryptocurrency market cap is currently sitting at $3.83 trillion.
3.83 trillion.
Yeah. And the last 24 hours saw $522 million in liquidations across the market. That was $222 million in long positions wiped out and $300 million in short positions.
So pretty intense trading activity, a lot of volatility, clearly.
Definitely. But what's perhaps more fascinating is that the stablecoin market capitalization just hit an all-time high, $258.5 billion.
All-time high for stablecoins.
Yep. That's a 2.7% increase just from last month. And daily trading volumes for stablecoins rebounded by 13.2% to $143.1 billion.
So even with all the volatility in Bitcoin and alts, people are holding and using more stablecoins. What does that signal to you?
Well, it's not just a number. It signals, I think, a robust underlying demand for digital dollars, maybe as a safe haven or just as a core trading medium. Even when things are choppy, it shows the infrastructure is being used.
Yeah, that makes sense. And perhaps the most telling detail for where the market's focus might be shifting. I saw Ethereum actually surpassed Bitcoin in global perpetual contract trading volume.
That's right. Clocked in at $90.82 billion for Ethereum, compared to Bitcoin's $82.93 billion.
What do you think is truly driving that change? Is it just utility, or is there something more fundamental happening that could, redefine the market's future?
That's a great question. Look, Bitcoin's digital gold story is still powerful, right?
Right.
But Ethereum's growing utility. It's the backbone for DeFi NFTs that's increasingly drawing in the institutional money, the professional traders. So this shift in perpetual contract volume, it suggests a sort of maturation of the market. Smart contract capabilities, technological advances, they're becoming just as compelling, maybe even more compelling for some than just a store of value.
So the market's evolving beyond its initial use cases.
Exactly. It's a clear sign.
That's a fantastic insight. It really does feel like we're witnessing a kind of financial evolution. And speaking of evolution, let's talk about the big players. The institutional and corporate moves seem to be really defining things right now.
They really are.
We're seeing this clear trend of growing corporate Bitcoin and Ethereum holdings just across the board. Take Semler Scientific out. They just invested another $25 million for 210 Bitcoin. Their total is now 4,846 BTC.
That's a significant move, definitely. And GameSquare Holdings also made a splash. They raised $90 million specifically to expand their Ethereum treasury, and they partnered with Dialectic to do it.
90 million for ETH.
Yeah. And the UK-based Smarter Web company boosted its Bitcoin treasury, acquiring the 325 Bitcoin for about $36.45 million. Their total is now 1,600 BTC. This isn't just, dabbling anymore. It feels like a strategic shift towards digital asset reserves.
It certainly does, and we're seeing some truly ambitious plays. Matador Technologies, for example, they have this bold plan to acquire 6,000 Bitcoin by 2027.
6,000.
Targeting 1% of Bitcoin's total supply. And it's backed by a huge $656 million funding strategy.
That's massive.
Then you've got BTCS Inc. They purchased 2,731 Ethereum, increasing their total holdings to over 31,855 ETH.
Wow.
And Windtree Therapeutics plans to acquire $60 million in BNB as part of a $200 million crypto treasury strategy. These aren't just one-off buys. These feel like strategic, multi-year commitments.
And this trend isn't just US-based. It extends globally. Even a Swedish consumer firm, Refine Group AB, unveiled a Bitcoin reserve strategy. They're aiming to raise about $1.03 million through a stock issuance just to acquire Bitcoin. What's truly striking for Ethereum's growing clout, though, is Bitmine immersion. Their Ethereum assets apparently reached $1 billion,
$1 billion in ETH.
reportedly surpassing the Ethereum Foundation's own holdings, which are around $665 million.
Whoa.
And then there's BTC Digital. They made a strategic pivot to prioritize Ethereum, converting all their Bitcoin holdings into ETH after securing $6 million in funding.
Converting all their Bitcoin. That's a statement.
It really is.
And the rebranding of SRM Entertainment to Tron Inc., with a core focus on crypto treasury holding over 365 million TRX tokens. It just underscores how deeply these digital assets are getting integrated into established corporate strategy.
Yeah.
If you connect this to the bigger picture, what's the takeaway? Is it corporations hedging against inflation, seeking growth, just recognizing digital assets as legitimate treasury components?
I think it's probably a mix of all of those things. It's definitely a profound vote of confidence in the space.
Okay, so this profound corporate embrace naturally leads us to the explosion in ETF activity and that deeper integration with traditional finance.
Absolutely. The U.S. spot Ether ETFs. Wow. They saw a record net inflow of $717 million, and then an even bigger one, $726.6 million, led by BlackRock's ETH and Fidelity's FETH.
Huge inflows.
This isn't just demand, it's surging institutional demand for Ethereum. And BlackRock has even officially submitted a staking application for its Ethereum ETF.
Staking, so they want to offer yield on top of just the price exposure.
Exactly. That signals a deeper level of integration and product offering.
We're also seeing new ETF filings that hint at continued innovation here. Like Calamos filed for a Bitcoin ETF, but with 20% downside protection using options.
Yeah, that's a fascinating twist on risk management for traditional investors.
And Canary submitted for a staked INJ ETF. Though on the flip side, the SEC pushed back decisions on Bitwise's Bitcoin and Ethereum ETFs until September 8th, 2025.
Right, a reminder that regulatory approval isn't always a straight line. It's still step by step.
Yeah, definitely not.
But what's truly fascinating here is the growing synergy between TradFi traditional finance and DeFi decentralized finance. JP Morgan did a cross-chain test transaction involving LNK.
Chainlink, yeah.
That isn't just a tech demo. It signals how TradFi is starting to directly leverage DeFi infrastructure. We also see NOAA and Gnosis providing USD virtual accounts for stablecoin users.
Bridging the gap.
Exactly. And major players like Westpac and Imperium Markets in Australia integrating Chainlink for tokenized asset settlements with the Reserve Bank of Australia.
Wow, with the central bank.
Yeah. This is like the quiet but dramatic upgrade of the plumbing of the global financial system happening right under our noses.
It really feels like that. Beyond that, Sberbank in Russia is planning crypto custody services. A major bank getting into the game.
Right. And Spyco raised $22 million for tokenized money market funds aimed at European businesses. That points to a growing market for digitally native financial products.
Okay.
And Ondo Finance launched its USDY tokenized treasury product. Basically offers stablecoin holders easy access to U.S. Treasury yields.
Making TradFi yields accessible through DeFi rails.
Precisely. It all signals increasing comfort and utility for digital assets within regulated traditional finance, making them more accessible to everyday businesses and investors.
Okay, now let's turn to the shifting sands of the regulatory landscape and the political crosscurrents that are always at play. In the U.S., the legislative battles are really heating up.
They certainly are.
House votes are expected soon for both the Clarity Act, which is about clarifying regulatory frameworks, and the Genius Act.
Right, and apparently around 35 Democratic representatives are expected to support Clarity, and maybe 70 to 80 members could back the Genius Act.
Okay.
What's crucial here, though, is that the Genius Act actually passed the House already, 215-211. But interestingly, with no Democratic support.
Zero Dems.
Zero. And the signing ceremony is apparently set for tomorrow. This act is really pivotal for stablecoin regulation.
Gotcha. And we've also seen the House approve 3 significant crypto bills, including a ban on CBDC's central bank digital currencies.
Yeah, they want that ban included in the National Defense Authorization Act, the NDAA.
Which is quite a place to put it.
It is. House Speaker Mike Johnson says Republicans are united in advancing crypto legislation, but there seems to be growing resistance among some Republicans now. Up to 10 are reportedly opposing a crypto bill.
So even within the parties, it's not totally straightforward.
Exactly. Shows there's still a nuanced internal debate about how best to regulate. And in a kind of surprising move towards efficiency, the SEC chair actually supports merging the SEC with the CFTC.
Merging the SEC and CFTC. Really?
Yeah, the idea being to improve coordination and streamline oversight for digital assets. Whether that happens is another question, but it's being discussed.
Interesting. What about the Senate side?
Well, the Senate Committee on Banking, Housing, and Urban Affairs postponed its market structure discussion draft. They're likely waiting to see how these House votes play out first.
So a bit of a holding pattern. It raises that question about the pace of legislation, doesn't it? Can Congress keep up with how fast this market moves?
That's the perennial challenge, isn't it?
Indeed. Internationally, we're seeing similar efforts, right? The EU's cracking down.
Yeah, the EU's anti-money laundering authority is warning crypto firms about new compliance rules. Things like evaluating beneficiaries, shareholders, and a complete ban on anonymous wallets by July 2027.
Ban on anonymous wallets, that's significant.
Very. And Australia's Financial Intelligence Agency, AUSTRAC, they've identified crypto as a key threat in combating financial crime. That's leading to major AML reforms affecting maybe 80,000 businesses by 2026.
80,000 businesses. Wow. What about the UK?
Well, the FCA, their regulator, sees 7 crypto ATMs and arrested 2 operators. So direct enforcement action there.
Okay.
And UK lawmakers are also pushing for a ban on crypto donations in politics. That came up especially after the UK Reform Party announced it would accept Bitcoin. Highlights the political sensitivities around crypto influence.
Yeah, that intersection of crypto and politics is getting complicated.
It is. Elsewhere, Russia approved a bill for its digital ruble, but the launch is now set for September 2026. A slight delay from their original 2025 plan.
Still moving forward, though.
Yeah. And a really interesting sign of global collaboration, Pakistan and El Salvador are forming a partnership.
Pakistan and El Salvador.
Yeah, to enhance crypto knowledge sharing. Apparently, there are plans for Pakistan to explore Bitcoin reserves and set up a regulatory authority for digital assets. It's a fascinating alliance, given El Salvador's whole Bitcoin experiment.
Truly unexpected pairing. What else globally?
Thailand's crypto sandbox, which is aimed at making crypto transactions easier for foreign tourists, is moving to the public hearing phase.
Okay.
And Hong Kong is showing some flexibility. They've extended the allowed stay for visiting professionals working virtual asset services from 30 days to 45 days.
So trying to attract talent.
Seems like it. It points to this global trend. Countries trying to balance innovation with regulation, wanting a slice of the crypto pie while managing the risks.
And we can't ignore the ongoing legal challenges that remind us this isn't just abstract tech, like Roger Ver, Bitcoin Jesus, fighting extradition to the U.S.
Right, over those $48 million tax fraud claims.
Yeah.
And the testimonies coming out of the Tornado Cash trial, revealing minimal aid from the developers to victims, it really highlights the complexities and, frankly, the challenges of decentralized protocols when they bump up against legal frameworks and accountability.
Yeah, the decentralization ideal meets legal reality. Okay, shifting gears completely. Let's look at the broader macroeconomic and political currents that are shaping this whole financial landscape.
Big picture time.
Exactly. U.S. tariff revenue, for instance, had a record $87.2 billion in the first half of 2025.
$87 billion. Wow.
Driven largely by those reciprocal tariffs from the Trump administration. June alone generated $26.6 billion, and the average effective tariff rate hit 20.6%, apparently the highest since 1910.
1910. That's something.
Yeah.
And what's really key here is, while that revenue might look good on paper, it raises major concerns about inflation.
Right, because tariffs are basically a tax on imports, passing costs to consumers.
Exactly. But despite those inflation concerns, U.S. retail sales actually saw a sharp 0.6% increase in June. That was the highest growth since March, and it beat expectations. The Dow even rose on that news.
So consumers are still spending despite higher prices.
Seems like it, for now. Adding to that economic picture, initial jobless claims hit a record low of 221,000 for the week ending July 12th. Lower than expected, lowest since April 2025.
So strong jobs, strong spending. It paints a picture of a surprisingly robust U.S. economy, even with the inflation pressure.
It does. Stock market performance on July 17th was a bit mixed, though. The Dow dipped slightly, while the S&P 500 and Nasdaq saw small gains.
Right.
Notably, NVIDIA and AMD stocks rose despite that mixed market. Continued strength in tech, especially AI-related stocks.
Makes sense. Now, the Federal Reserve is right at the heart of all these macro discussions, and there are these ongoing concerns about its independence amid all the political pressure.
Huge concerns. And the signals from Fed officials are confusing. You've got Fed official daily suggesting 2 interest rate cuts are likely this year.
2 cuts. Okay.
But then Governor Kugler emphasizes rates will likely stay unchanged because tariffs are hitting consumer prices, and Bostic suggests inflation might be at a turning point, so maybe hold off on cuts.
So completely different messages coming out of the Fed. No consensus at all.
Not really. Makes future monetary policy highly uncertain for everyone.
And the political pressures on the Fed are just undeniable. President Trump has publicly said he wants to dismiss Fed Chair Jerome Powell.
Yeah, citing dissatisfaction with interest rates.
And he's also considering imposing 10% or 15% tariffs on smaller countries, with a big policy announcement expected August 1st.
That could inject even more volatility and uncertainty into the global economy.
Definitely. If we connect this to the bigger picture, Arif Hussain from T. Rowe Price warns that Trump's tax cuts will likely push the U.S. fiscal deficit higher.
Right, which puts pressure on long-term Treasury yields and could potentially reduce foreign demand for U.S. Treasuries.
And that's not just abstract economics, right? It could have real long-term implications for the U.S. debt market, the dollar's global standing.
Which in turn could actually boost interest in alternative assets, like crypto, if confidence in traditional assets wavers.
Interesting connection. On the sort of political digital assets front, Trump Media Group has filed trademarks for Truth Social AI and Truth Social AI Search.
Pushing into AI on their platform.
Seems like it. And the WLFI token, which is linked to Trump, is apparently set for tradability after a big governance vote. So political figures and their associated entities are definitely exploring this space too.
It's all converging, isn't it? Politics, tech, finance.
It really is. Okay, let's round out our deep dive with a look at innovation and evolution, what's next in crypto tech.
The exciting stuff.
Yeah. The convergence of AI and Web3 seems to be gaining serious traction. OpenAI just unveiled a new ChatGPT agent with better conversational abilities. And this record mode feature for Plus subscribers on macOS, it records system audio for transcription and notes without even joining a meeting.
Imagine the productivity boost for people in endless meetings.
Seriously. And this isn't just big tech, it's about making Web3 more accessible too, right? Sonic launched Spark AI.
Yeah, an AI tool designed to let users create Web3 apps without needing coding expertise. That could really democratize access to building decentralized applications.
Lowering the barrier to entry.
Exactly. And maybe even more foundational, Gavin Wood, the founder of Polkadot, outlined a new Proof-of-Personhood protocol.
Proof-of-Personhood, what's the goal there?
It's aimed at tackling identity verification issues in the age of AI, basically ensuring we can tell the difference between real people and sophisticated AI agents online. Crucial for trust.
Absolutely crucial. Okay, what about DeFi and core infrastructure growth?
Yeah.
Still surging.
Oh, yeah. Bitcoin DeFi, or BTCi, has seen truly explosive growth. The total value locked, TVL, that's all the assets locked into DeFi protocols. It soared from about $300 million to over $7 billion in 2024 alone.
$7 billion from $300 million.
Huge jump, driven by new protocols, institutional investment, even though there are still some trust issues lingering. Ilya Volok from Starkware talks about Bitcoin evolving from just a static asset to a more versatile financial tool thanks to things like wrapped Bitcoin, trustless bridges.
So Bitcoin's getting more functional in DeFi. It's not just digital gold anymore.
Exactly. And Ethereum's trustware vision, that potential evolution into core infrastructure, that's a key long-term development for you as a listener to watch.
Definitely.
Elsewhere in DeFi, PancakeSwap, the decentralized exchange, achieved $23.75 million in protocol fees in just 24 hours.
Wow. Fees.
Remarkably surpassing Tether and daily fee generation. Shows its dominance. And Aave, the lending protocol, reached a record TVL of over $30 billion.
$30 billion locked in Aave.
Yeah, with significant increases in borrowing and lending rates for stablecoins like USDT, like 15.75% APY to borrow, 13.65% to lend. Those are serious yields.
Serious DeFi yields, yeah. Speed and accessibility are huge factors too, I imagine.
Absolutely. Change Now is now averaging crypto swap times under 2 minutes. Makes transactions incredibly efficient.
Under 2 minutes.
Gnosis and Noah are collaborating to provide USD virtual accounts for stablecoin users in the US, bridging that gap between digital and traditional banking.
Makes it easier to use stablecoins day to day.
Right. And Aether and Credible Finance unveiled a DPIN-backed credit card and loan product. It lets Aether token holders access stablecoin credit without actually selling their tokens.
Leveraging your assets without liquidating. That's innovative.
Very. Midas also launched 2 new tokenized DeFi investment products, MMEV and Ember7 Yield, on Etherlink, just expanding the sophisticated options out there.
Okay.
And in a really interesting niche application, Privy Cycle. It's a new project aiming to tackle privacy issues around health data, specifically in period tracking apps, using Ethereum.
Using blockchain for health data privacy. Fascinating.
Shows how the tech can address very specific real-world concerns.
Okay, finally, let's quickly hit some key platform and ecosystem updates. What are the big exchanges and networks up to?
Well, Coinbase launched its Base app. It's meant to be an integrated platform, trading, social media, payments, app discovery, kind of a one-stop shop for crypto users.
The super app model?
Sort of. Binance is constantly innovating too. They introduced CreatorPad to reward crypto content creators, ETH flexible products with HWiper rewards, the ERA trading challenge with a massive $6 million prize pool.
$6 million prize pool?
Yeah. They've also added new listings, Yuldo Games, Aspecta, and launched a blockchain for Vietnam initiative, investing over $1 million in education there.
So investing in the ecosystem, not just trading.
Seems to be the focus. Quick note, they did temporarily suspend Thorchain transactions for an upgrade, but that's likely temporary.
Got it. What about other platforms?
Telegram's blockchain integration is enhancing dApp access using Ethereum. That could be a huge boost for the TON network, possibly pushing its price target towards $3.50 as it gets easier for Telegram's billion users to access.
Yeah. A billion users? Yeah, that's significant.
The Turan network also hit a milestone, over 320 million activated accounts. Just massive user adoption there.
Huge numbers.
And CME Group, the big traditional exchange, is exploring 24/7 crypto trading. They see the institutional interest, specifically mentioning Solana and XRP, though they did say they're not pursuing meme coin derivatives, probably wisely.
Probably for the best, and Solana itself.
Poised for a potential breakout towards $185, they say. Institutional interest in its liquid staking ecosystem is growing, and some analysts are predicting a 2025 super cycle for SOL.
Super cycle, bold call.
It is. Lastly, Arbitrum's token, ARB, surged recently. Why? Because PayPal's stablecoin, PYUSD, now supports it, alongside Ethereum and Solana. Shows the huge impact of major payment integrations on specific blockchain networks.
Yeah, that PayPal integration is a big validation. Okay, so if we take a step back from all these details, what does this whirlwind of news really mean for you, the listener?
Well, we've really seen this dynamic interplay, haven't we? Surging crypto markets, aggressive corporate strategies moving in, regulations evolving super fast, significant macro trends like inflation and tariffs, and direct political influences.
It's a complex picture.
Incredibly complex, but also incredibly exciting. It's a landscape that's changing almost daily.
Exactly. It's a lot to take in, but that's why we do this deep dive, try to connect those dots. So here's maybe a thought for you to mull over as you navigate this fast-evolving space.
Okay.
Given this potent blend, you've got surging retail interest, aggressive institutional buying, rapidly changing government rules, new tech popping up. How might the next few months reshape not just the crypto markets, but maybe broader economic confidence and innovation itself? What overlooked detail from today's news flurry might actually be tomorrow's game changer for you? Something to think about.